how much less stress would you have in your life if not only did you have, okay, we know that over the long haul, all of our investments and cash flows are set up in a way to maximize what's important to us while paying as little in taxes as possible. So somebody's juggling that ball. Oh, and also we don't get surprised on April 13th
That's
and
it.
14th. We
Yeah.
don't get a surprise bill. This is Successfully Retired with Hamilton Brandenburg. Okay, Rick. So one thing that sometimes surprises new clients, especially if they've been working with another financial advisor and they're coming to me from their previous firm, is that I ask for a tax return at the first meeting. We're going
Yeah.
to be reviewing your tax return, and occasionally, not often, but occasionally, somebody will kind of be like, "Why do you need to see my tax return? I already have a CPA." So, why don't you talk to me? I know we both have a different way of explaining it, but I
Yeah.
thought we should talk about what is the difference between having a tax accountant, or as I like to refer to them as a tax historian,
Yeah.
and a tax planner.
Yep.
And why do people probably need to have both of them working together in retirement?
Yeah. 100%. I'll just frame this by saying so that some of the CPAs out there don't get pissed off.
Yeah.
If if you are doing if you like for your business owners and you're doing like tax planning and all this stuff, awesome. We're talking about personal tax planning, which every single one of my clients that aren't really, really high end business owners are not getting. You're paying maybe a couple $100 to $400 for a tax return, right? That's what we're talking about.
Well, I think that's a good place. Let's pause. So, what is the difference? So, a tax accountant versus a tax planner. I would say the tax accountant or the tax historian is usually thinking about 3 years at the very most.
Yeah.
Last year's tax return, this year's tax return, and next year's.
Well, I explain it like this. It's very, very simple. It's right in the title. A tax planner is going to plan for the future. So we're looking at your total lifetime tax bill or savings and also flexibility. There we put a value, I put a value on how and when you can spend your money, not just the dollars and cents, but also the lifetime tax bill and the risks around certain scenarios, whether you die early, die young, your wife's
Yes.
younger, all that other stuff. That's planning ahead. And there's some assumptions built in because we don't know the future, but we plan for it. A
Well,
tax, a,
as Tom Gow would have said, in retirement, every investment decision has a tax implication.
right?
Somebody needs a plan for this. And I know a lot of great CPAs who are doing tax return preparation for clients. And these CPAs, they offer tax planning.
Yeah,
$10,000.
yeah. They're just not
Do
doing
you
it for
think
you,
mom and pop are just going to
right?
sign up, cut a check
Yeah,
for
it's
five or
not
10
about the
grand?
it's not about the person. It's about the services being offered.
Yes.
And so the planner is going to plan ahead. The accountant accounts for what already happened. And
Yes.
so here is my 2024 everything 1099, W 2, all the forms, everything that looked taxy in the mail. I put it in a box, I give it to him or her. They figure it all out, do the best that they can to find me extra deductions or little things that are legal. But essentially they can't pull any other levers. They're accounting for things that already happened in the past, putting
Yes.
them in the right place and doing the best that they can. And that's different than making decisions so that your future taxes might be lower or your future income is more flexible. That's the planning side of it. And I will say this one thing too. A lot of this is the client's fault. Okay.
That's always a really popular thing to say. Just
I
know that,
know.
hey, if
Please,
you're listening to
like,
this is probably your fault,
but
according
this
to
is
Rick.
not us. But this isn't us ganging up on accountants and tax preparers. This is the client's fault because they want the cheapest tax return possible and they want to pay the least amount of taxes possible this year.
I'm gonna take the blame and I'm gonna say a little bit to the client maybe, but also a lot of it to financial services professionals who they have worked with for not articulating the things that they need to be worried about. Like most people don't realize they have a need for long-term tax planning
Yeah, it's
because
fair.
nobody has ever articulated and said, "Here's what you need." And I have to tell you this too. Here's a fun question, and actually, you might be a bad guinea pig for this question, but Rick, do you like to deliver bad news?
Contrary to what you might think, I actually don't.
Okay.
I just do it because I do what's necessary,
Yeah,
and
yeah.
I always tell people the truth, but I don't actually get enjoyment out of it, even though I think sometimes you think I do.
I have had I literally in the last week I had to tell my wife, I was like, "No, I don't enjoy delivering bad news," because there was a conversation that had to happen with somebody, and it was either she or I could have had it, and so I had the conversation. She's like, "Well,
Yeah.
you like those conversations." I was like, "I don't like those
No,
conversations. I just do those
I'm
conversations."
just a
But
doer and I have to get
yeah, yeah.
things done.
Accountants don't like delivering bad news either, and I think
Yeah.
sometimes where again, I'm putting this on the financial advisor. If you're going to be doing tax planning, you're telling a client, we need to do this, we need to do that, move this around. And all of a sudden, none of this is communicated to the tax preparer. And the tax preparer gets to look somebody in the eye and say, you owe $17,000.
I know.
I had to do that this year to a client because I've started doing tax prep in house. And I've had to tell a client, like, you owe $20,000
Yeah.
in federal income taxes. We knew that was going to happen.
Yeah.
We knew it was going to be close to that. We didn't know it'd be that bad. That's a horrible thing to have to tell somebody. It doesn't
Yeah.
matter how much they love you, or like you or trust you. It sucks to have to deliver such bad news. So yeah, to your point, a lot of times the things that these accountants are saying, put some money in your pre-tax 401k, do this, do that. It's all about I'm just trying to lower the tax bill today
Yeah, because
because
that's
this
what you
person
want. That's
wants me
what
to
you're
fix their
asking
problem.
me for. Yeah,
Yes.
you want to only pay $189 for a return. You want
Yes.
it done yesterday and you want me to lower
Get you a
your tax bill
$5,000
this
refund.
year. Right, no matter what, right? And so that's what they're laser focused on. The reason why we're talking about this is we just had an episode about the effects of assuming that your taxes will be lower in retirement. And that was a great episode. If you haven't listened to it, go check it out. But that's kind of where all this evolved from, was because a lot of people are getting told that as a rule of thumb, and it's easier to say put all your money into pre-tax, watch your this year's taxes go down. I feel more comfortable because I'm delivering you good news rather than asking
Yes.
you to pay more money now so that you save more later. And sometimes I feel like my relationship might, like my working relationship might hinge on that. Like
Yes.
if I tell you that your taxes are high this year, even though it's in your best interest, you might go somewhere else because you
Yeah.
think, even though it's not, you think my job as your accountant is to get you lower taxes this
And
year.
it's
That's
not.
really not what my job is.
I think that's okay. That's the perfect distinction, and that's true. And I've had people tell you, "Oh, this person couldn't get as much of a refund, so we don't want to work with him again." Like, bro, you get the refund that you deserve. An accountant
Right.
can't do any if they're doing anything that's creative with the tax code. I don't want to touch that tax
That's
return,
right.
and if they do, you actually don't want to do business with that person. But a
Yeah,
historian's job is literally just like accurately record what has happened,
correct.
and I just think about it like, okay, imagine if you were in high school and history was the only subject that you were learning. Is history important? Yes. Is it interesting? To me, it is. To a lot of people, probably not.
Yeah.
But like, you can't just drive around looking in the rearview mirror all the
Yeah.
time. If you wouldn't plan out a road trip looking in the rearview mirror, you need to be thinking about what are the conditions going to be ahead and how are they going to affect me. Which is why if you and a lot of great accounting firms are offering tax planning, and if you're not going to pay your accountant to also do tax planning and you're close to retirement and you have money in different types of accounts and things to juggle, you need to hire or work with a financial advisor who is doing tax planning.
Yeah.
I'd argue that's the person who's probably closer to the cash flow
Yeah.
um, understanding, but somebody needs to be doing this.
Yeah. And
And
you
the
said
truth of the matter is there's usually nobody.
you said something really important at the beginning, and then we can wrap there. You had to deliver the news that someone owed $20,000 in taxes. Okay. You had an idea though ahead of time that it was going to be a big bill, just weren't sure it was that. What I've found, and I've done this with a few clients very, very recently and had good success with, and now I'm laser focused on it now, is the planning that we're normally talking about is long-term planning. So
Yeah.
Roth conversion planning and all this stuff and moving money and saving for the kids, all this stuff, but also planning 1 year out, 2 year out. even if it's going to be like unfavorable,
Sure.
someone knowing 12 months, 18 months in advance that they're going to owe $22,000 in taxes versus finding out April 14th is so damn powerful.
Yeah.
It's unbelievable. I mean, I literally have 2 clients right now paying quarterlies for next year that I did the math on and I did the tax projections on. When they go to their tax preparer or their accountant, all those taxes are already going to be paid versus that
Yeah.
person having to come back and say these moves you made in your investment accounts and other things is going to cost you 20 grand. They find out on the spot, are blowing up, have to come up with the money on. Now they have time to plan for it. They're pulling the money out. They're writing quarterlies. They're okay with it because
Yeah.
it was intentional and they knew ahead of time. And I think that's part of the planning too.
For the listener, how much less stress would you have in your life if not only did you have, okay, we know that over the long haul, all of our investments and cash flows are set up in a way to maximize what's important to us while paying as little in taxes as possible. So somebody's juggling that ball. Oh, and also we don't get surprised on April 13th
That's
and
it.
14th. We
Yeah.
don't get a surprise bill. Yes,
Yep.
we can scramble. We can always scramble. You can file an extension, pay the bill, this and that, whatever. But you don't want surprises. And if you coordinate well, have a good tax historian and a good tax planner, and your tax planner is taking the initiative on communicating to your tax preparer, your tax historian,
Yeah.
and getting them what needs to be gotten for documentation. We like to do a one-page little letter. I know you do the same thing, Rick,
Yeah.
where it's like, hey, here's a 1099 letter. Here's what we did with your investments last year. It's a very
Don't
simple
forget
explanation.
8606 because we did this,
Yes.
and here's the dates of it, and here's how much goes on this, like all that sort of stuff.
Everybody can start living in that proactive
Yeah.
zone instead of that reactive zone. And that just makes everybody's day go a little bit easier.
Love
So
it, buddy.
make
Yeah.
sure you got all your aces in their places, as I would say when I worked at Chick-fil-A.
All right. Thanks.
All right. Thanks, buddy.
Yeah. Bye.
This show reflects the personal opinions and viewpoints of myself, Hamilton Brandenburg, and my guests. Opinions and viewpoints are subject to change at any time without notice. No representation is made as to the accuracy, completeness, or relevance of the information presented. The information discussed is general in nature and does not constitute investment, tax, or legal advice, so consult with your tax, legal, and financial professionals about your specific situation. Past performance does not indicate future returns, and any indices mentioned are for reference and cannot be invested in directly. Brandenburg Financial Services is a DBA of CS Planning, an SEC-registered investment advisor.